All right, so welcome to Module 1. So this is our first module, and we're going to be talking about life insurance application, underwriting, and policy delivery. So let's take a look first at the basic application process, right? So before we start talking about, the specifics into the types of the policies, into the um, specific provisions right, associated with them, let's just go through, right, the general process, right? Because we're always curious about that. So first, right, the first step is that, the agent, right, you, the future agent, you're going to negotiate with your potential clients, right, on the best insurance policy, right, based on their needs, right? Now you see that I put it star by that, right? Because the applicant might not be the insured, right? Maybe you might be working with a mother, right? But the mother wants to insure a child, right? Her child. So we'll see along the way that the insured doesn't have to be the applicant or the client, right? They can be different depending on if you're buying a policy, if the client is buying a policy for themselves, or if the client is buying a policy for other people, like the dependents. After that, the applicant and the agent fill out the application form, right? And the agents explain the disclosures and the client signs. So this is one of the important parts as well, right? Because um, we will really dive into the disclosures in just a moment. What are the specific disclosures, right? How is data being spread? How is your personal information being used, right? And then next, the applicant may pay additional premium, right? So the if they do, right, that is an option. But again, right, it's not required. Okay, so that's why you just want to write that down as a side note. And we'll talk about that in just a moment. An agent submits the application to the insurance company, right? And the insurance company is also called the insurer, right? The insurer. Then underwriters, right? So every insurance company has many underwriters, and the underwriters, there is going to be one underwriter that's assigned to your client's case. And so these underwriters, they review the applicant, right? And they decide, should I issue it or not? And they keep in mind, right, risk, health history, right? Personal characteristics too, right? If you smoke or not, if you did tobacco, right? All of that. And if accepted, right, the agent delivers the policy to the policy owner, right? Um, and the policy owner continues to pay premiums. So premiums are what keeps the policy active, right? It can be monthly, it can be quarterly payments, right, made to the insurance company. And death of the insured, right, will cause death payments to the beneficiary, right? So in life insurance, right, we know that if right, the insured passes away, it will cause the death benefits or payments to be paid to the beneficiary. If it's in health insurance, right, then the policy owner can file claims, right? And the claims become approved, then there could be benefits paid for those health claims or accident claims. So we do want to know the relationship, right, between the applicant or the client, the insured, the insurance company, right? You also see it as the insurer, as I mentioned. Underwriters, right? Underwriters are reviewing the application, the policy owner, and the beneficiary. And we will go through these terms along throughout the module, but it's just important to keep in mind, right, of these terms as we go along. So to start off, let's take a look at the parts of the application, right? So we just took a look at, right, we first need, right, some sort of negotiation, right? We talk with the clients, we explain the policy. That's why, right, even after taking the exam, it's important to like shadow, fellow insurance agents, really get to know policies um, more in depth, right? But after that, right, once you become more familiar with it, you can explain to the clients, right, about the policies. And if everything works out, you can start filling out application form. And the application form has many parts, right? So the first part, right, is basically general information, right? Age, date of birth, sex, address, martial status, occupation, and other pieces of personal information. Okay. Now, for part two, right, this is about the medical history, right? The client would start to fill out their medical information, and then part three would involve the agent's report, right? So the agent would type the personal observations of the client. Now, in reality, right, in an application, it's not broken up into part one, part two, part three, right? But this is kind of like a basic rundown in which, right, when you think about, well, when the underwriters are making their evaluations, they want to know about the health history, right? They also want to know the general information about the client, right? They do often fill in social security numbers, right? Address, occupation. So all that is important, right? So the insurance company or the insurer can evaluate risk and really just identify who you are. So now let's get into the parts of completing the application. So with topic one, we want to first start off by signatures, right? So something that's commonly used, right, is DocuSign, right? Most of it is online, right? And DocuSign is commonly used, right? And in this, right, if you have used this before, right, this is right where the agent and applicant are required to both sign the application, right? On this platform, maybe another platform. And if the applicant, right, is someone other than the proposed insured, the proposed insured must also sign the application. Now, why is this important? Well, if we take a look at this, right, remember how I said that sometimes the policy owner is different from the proposed insured, right? If we have maybe business partners, right? We might have a parent and a child, right? So in most cases, right, except when the insured is a minor child, right, they would also need to sign the application. Okay. Second, change the application. So sometimes changes might be made, right? If there's an error in the application. And so in the event of that, the agent must correct the information and have the applicant initial the changes. Okay, so that's important, right? Making sure that the the applicant knows about any changes being made. Okay. And again, right, the main point is that the agent can never change the application without the customer present. Okay. So far, right, we've talked about, right, just basics, right, of signatures and changing applications. Now let's go into some terminology, right? Especially with life insurance, you really want to be familiar with that. Number three, right here, right? It's basically talking about the consequences of the incomplete application, right? If it's incomplete, it's going to be returned to the agent. But in most cases nowadays, they before you submit the application, right? Since it's online, they will often flag areas that are incomplete for you to check over. But if right, it is incomplete, it will be returned to the agent. Okay. And number four, we're talking about representations and warranties. So this is something that, right, is new to us, especially with life and health insurance. We really want to be familiar with these words, right? This terminology. So with warranties, these are statements made by the applicant guaranteed to be true, right? So these are the name, the date of birth, right? So if it's untrue, right, the contract would be revoked. But warranties, you want to be thinking about that these are statements that are guaranteed to be true. Now, how about representations? Well, representations are statements believed to be true, right? So this might be, your weight, your height, your medical history. And why might that, for example, why might medical history be believed to be true, right? But it might not be true. Well, you might say on application, right, that you don't have any cardiovascular diseases, but in reality you might, right? But you just don't know about it yet. But representations are believed to be true to the applicant's best extent, right? But they are not guaranteed to be true, right? Your name is guaranteed to be true, right? But sometimes, right, your information, medical information, some pieces such as weight or height might not be up to date, but it's just right to the applicant's best extent. Okay. Now, we really want to focus on next the Fair Credit Reporting Act. And this is a very, very important topic on the examination. Now, why is it? Well, remember when we talked about disclosures, right? When we go back here and we talk about disclosures, right? We want to take a look at, well, how can information be regulated, right? How can it, how can we ensure that the rights of consumers are protected, right? Especially when an inspection or credit report is requested. And we'll take a look at this now. But what we just want to know is that the FCRA, right, helps to regulate how information is collected and protect the rights of consumers. So now let's take a look at what is a credit report and an inspection report. So the credit report is used for underwriting to determine the likelihood of making premium payments. Now, why is that important? Why is that important? Well, oftentimes on the application, right, there will be um, places where the applicant will need to state, right, oh, what is their net worth, right? What is their annual income, right? And there will be a place, right, for credit history, right? A disclosure, right, of a credit history. So why is this used? Well, the insurance company really needs to make sure the applicant can make premium payments on time, right? Remember, premium payments are what the client, right, or the policy holder provides, right? It's their part of the consideration to the insurance company, right? And the insurance company's consideration is that, okay, they will pay death benefits or claim benefits, right? In the event of a death or a health occurrence. Okay. Now, second is, as I mentioned, inspection reports. So what are inspection reports? Well, this is a report about the applicant's character, lifestyle, and financial stability, right? So character and lifestyle, like do you drink often, right? Do you do tobacco, right? That's something that you might ask, right? Do you drink often, right? It might be asking about your driving record, right? So all of these pieces of information, right, constitute, right, what's part of this inspection report. And companies are allowed to obtain this, but the applicant has the right to receive the copy, right? And so, right, they should be notified and they have a right, right, to receive a copy. So besides from the credit history report, the credit report and the inspection report, we also have our disclosures at point of sale with MIB, the Medical Information Bureau. So what is this? Well, this is information which maintains medical information about individuals. So why is this important? Well, the insurance company needs to, again, evaluate the risk of the applicants, right? So they need to utilize this medical information, right, to control the cost of insurance and help underwriters, as I said, evaluate risk. Okay. Next, with HIV and AIDS-related tests. So whenever this is required, right, the applicant's consent must be obtained, right? So if applicant is requested to do this, then their consent must be obtained beforehand. Okay. So these are the four major disclosures that we want to be aware of. Credit history, the inspection reports, MIB, and age-related tests. Okay, so besides from the FCRA Act and the other disclosures, we also have two other important acts. The first act we want to take a look at is the 2001 USA Patriot Act. Well, this is a pretty easy act to remember. This act is designed to detect and deter terrorists and their funding by imposing anti-money laundering requirements on financial institutions. So what does this mean? You might be wondering. Maybe this is your first time that you have heard about this, right? What is anti-money laundering? Well, let's look at the word money laundering. Money laundering is when someone, for example, utilizes money, right? Illegally gain money, for example, through selling drugs on the black market, right? Utilizing that money to purchase insurance, right? Introducing that money to the financial system. So that is money laundered, right? Because you're using money that was not legally obtained. So right, that anti-money laundering would be against that, right? Against introducing illegally transacted money into the current financial system. The Gramm-Leach-Billy Act is designed to require financial institutions to store personal information in secure manner and provide notice of their policies regarding the sharing of financial information, right? So the client should be aware of, okay, how is my information being used, right? And how is my information being distributed? Okay, all right. All right. And then lastly, we want to be talking about collecting premiums and issuing the receipt. So what is an insurance premium? Well, as I mentioned, right, that's the amount that you pay each month. It can also be quarterly. It can also be semi-annually, or it can be annually, right? And to keep your insurance policy active. And so when you submit application with the initial premium, right, you will receive a premium receipt, or it's also called a conditional receipt. Okay. So agent issues that to the client. So why is this important? Well, remember, initial premium is not always required, right? It's not required that you pay initial premium when you submit the application, right? Because you don't know if you're approved yet, right? The client, right, doesn't know if they're going to be approved yet. So if this initial premium is collected, right, by the agent, now there will be this conditional receipt issued to the client. So this conditional receipt denotes that coverage will be effective once the applicant proves to be insurable either on the date that the premium was received initially or the date of the medical exam. Now, why would this make sense, right? Okay, I paid the premium now, the coverage should be effective, right? Once my client proves to be insurable on the date that the premium was initially received. But why is there this medical exam portion? Well, this basically denotes that sometimes a medical exam is required, right? And with a medical exam, right, sometimes there might be a blood drawn, right? It might do a urine test. And so with that, if that is required, right, then the coverage will be effective on the day of the medical exam. Okay, right. So just make sure that we take a look at this, right? Knowing when coverage is going to be effective, right? Depending on if a medical exam is needed, right? Or if the initial premium is paid. So what if it wasn't paid, right? What happens then? Well, keep this in the back of your mind. We will revisit this, okay? But keep this in the back of your mind. We'll revisit this in the next few topics. But for now, we just want to know, okay, if a initial premium is paid, then, right, I want to go back to review this statement here. Okay, so now let's take a look at these questions here, and then we will go over them shortly. Okay, so let's go ahead and go over these questions. So for the first one, it would be what? B, right? The FCRA Act. So remember how the applicant, right, can obtain a copy of the report, right? And they're able to question the validity and the source of the information, right? So this helps to protect consumer information, right? And provides them with the opportunity to share their concerns with information because it should be fair as the act kind of denotes there. Now, with number two, right, when a producer submits an insurance application to a company, the producer must take all of the following actions except what? What do we think about this one? Well, let's go through them because this one is a little bit tricky and we really need to pay attention. Number one, submit the initial premium. Yeah, right. If it was collected, we do need to submit it. Two, ensure any changes on the application were initialed by the applicant. Oh, yes, we talked about that with signatures. C, submit a completed medical information report. Ooh, this is not correct, right? So this is the right answer because we're looking for accept. And D, complete the producer's report. We do, right? We do need to complete the producer's report. So we do see that C is not correct because we don't need to submit a completed medical information report, right? Remember, that is done by the MIB, right? The only thing we need to submit with the application is just some basic pieces of medical history, right? Not a completed medical information, not an entire report, right? That is more done by the MIB and the insurance company, and the underwriters are in charge of that. All right. Number three, statements made on the application by the applicant are believed to be true on the best of his or her knowledge are, right? So take a look at 3 and 4, and then we'll go over them shortly. Okay, so let's take a look at number 3. So for number 3, these are statements that are believed to be true to the best of his or her knowledge, right? So that's a representation. Are they guaranteed to be true? No, but they're believed to be true to his or her best extent. Okay, so this is again, I just want to give you these hints along the way. This is more of like a definition question, right? On the exam, right, you'll see some of these definition questions, but you'll also see like number 4, right? This is more of like a contextual question, right? So we see that in this case, it would also be a representation, right? And it kind of relates to the example I gave in the election topic 1, right? This is where an applicant believes to the best extent that he or she's in good health, but in fact, there's a disease that he or she's not aware of. And that's pretty common, right? Because some diseases, you're not aware of it until there's symptoms, right? Well, until you get a CT scan, right, on your checkup maybe, or get some sort of scanning, right? So this is, that's pretty common. So those statements, right, would be called representation because it's not guaranteed to be true. So again, these are contextual questions, right? Contextual questions. Number 3 is more like a definition-based question. All right, let's go through number 5 and 6 now, and then we'll go over them shortly. All right, so for number 5, the policy owner can also be what? Well, the answer for this one is D, and it's a little bit tricky. Now we should know, right, that the policy owner can also be the insured, right? We talked about that. Oh, you can purchase insurance on yourself, right? So you can be the one paying premiums and the one being insured, right? But what we talk about in the next few modules, when we talk about business related policies, the policy owner can also be the beneficiary. Okay. But for now, as long as you know that the policy owner can also be the insured, then you're in good hands. Number 6, which of the following is true about the 2001 USA Patriot Act? So for this one here, we just kind of need to think about the definition, right? And that would be B, right? A is the FCRA, right? C is the Gramm-Leach Billy Act, right? And D is one of the other disclosures that we talked about with HIV and AIDS.